All right.
Hey everyone, welcome back to the show. Like I said in the introduction, I'm here with Nathan Sprague with Outlaw Mining. Nathan, welcome to the show.
Thanks for having me, Ben.
Looking forward to the conversation today. I'm especially excited, Nathan, because you come from such a cool background of power and energy, and then you've been able to bring that into the world of Bitcoin mining. And what I'd love to start with is, can you give us your background and maybe give us the background before Bitcoin mining, and then what facilitated the move into the Bitcoin mining space?
Yeah, sure. I studied electrical engineering in school, and before I even graduated, I knew I had very little interest in doing any sort of what I would consider real engineering type work. I was more fascinated by financial markets and had an opportunity to join a joint action agency and get involved with wholesale power markets and power trading right out of college. And had been off and running in that industry ever since. So it was a great fit to kind of marry, some of my analytical and engineering skill sets and background from schooling with, kind of the financial markets and trading side of things that come along with power marketing and power trading. So, yeah, I got my start out of school with a joint action agency in the state of Missouri. They operated a public power pool providing 24/7 full electric requirements for about 35 municipal electric utilities in the state of Missouri. At that time, that was 2007. So everything was largely still what I would describe as bilateral physical trading markets, where you actually had to pick up the phone and talk to a dozen different counterparties every hour or at least multiple times throughout the day to make wholesale power transactions and buying and selling excess power or capacity that you might have available. So um, got some good experience in kind of the old days of physical bilateral power marketing and trading in those first few years. After about 4 years with that group, I had an opportunity to pivot into the world of renewable development and worked for a utility scale solar developer in the Kansas City area. At that time, that was 2011, and at that time, a 3 megawatt project was considered utility scale because solar hadn't really evolved
Sure.
into the hundreds or thousands of megawatts type projects that we see today. So at the time, building even a 1 megawatt project was a pretty large solar project, and we were able to implement kind of a cookie cutter type project and replicate that process with the same tax equity investment structure with a number of Missouri utilities that I had existing relationships with, and so got a couple years of experience there in the solar development world, and then decided to make the pivot back to more what I would describe as more traditional wholesale power marketing and trading. Joined a group that was focused on those efforts and was with them for about 8 or 9 years. And my efforts were largely focused in an area that we called asset management. So it's just a scenario where independent power producers and utilities, largely who had merchant generation, would contract with our group to facilitate power trading and marketing and optimization strategies so that they could earn every revenue possible through the operation of their plant from a trading perspective. So, we were monetizing any excess capacity or energy that they had from those plants on a 24/7 basis between our group and our trading desk, as well as implementing hedging type strategies 24/7 around the clock. So, um, towards the end of my tenure there, I kind of started to explore some other opportunities and had an opportunity to join a large scale hosting and Bitcoin mining company in Compute North there in the tail end of 2021. And my role was largely focused on leading their origination efforts. So I would be responsible for sourcing our new power supply deals, structuring the terms of those transactions, and would really be the nexus of developing our new site development locations.
And
So it was just a great opportunity for me to leverage all of that wholesale power marketing and trading experience into the world of Bitcoin mining because, as you know, sourcing those power supply deals and cheap power supply deals and implementing good energy management practices are such a critical component to making a successful mining operation.
yeah, and so that's what I was going to jump in and actually just quickly ask if you could maybe, double click on what was the interest, and maybe it was Compute North that sought you out. I wouldn't doubt that at all because of, how much experience you have, but what was it that was, I mean, and you just kind of touched on it, but maybe you could go a little bit more on, why a Bitcoin mining company would want someone of your caliber and talent in the energy space.
Yeah, I mean, it's easy to look back in hindsight now and see that, after roughly a year and a half in the Bitcoin mining industry, I can tell you firsthand that there's still just not a lot of experts in the energy space who are a part of the large commercial scale Bitcoin mining community. It does look like we're on a good trend upwards to where we're making the pivot from years of kind of traditional energy marketing trading experience and getting into Bitcoin mining. But yeah, a couple of years ago, there was very few, if any, um, people who are a part of these groups and teams and companies who had a lot of experience and relevant experience in understanding the nuances of how all these different power markets work and how to structure large-scale PPAs and power transactions and implement uh, energy management and optimization strategies around different trading products and derivatives. That seemed to be a pretty large gaping hole in the industry that folks such as myself could step in and help fill.
Absolutely. And I want to get to outlaw mining because that's where you're at today. But just again, quickly before we get there, having that knowledge and that skill set, is that mostly enabling you to go to a power generator and be able to have that intelligent conversation and to be able to actually walk them through why Bitcoin mining would be the right customer for them? Or is it just that these Bitcoin mining companies were really maybe starting to look at vertically integrating power generation within their own operation? Could you maybe touch on that?
Yeah, I mean, I think it's pretty obvious in my mind, especially over the course of these past 2 years, as large commercial scale Bitcoin mining has scaled up and become more prevalent. Virtually every utility and independent power producer, I'm certain over the past year or two, has been approached by likely dozens, perhaps even hundreds of
Yeah.
Bitcoin
Yep.
miners, wanting to source power supply deals or look at developing projects on their systems. And you know, I think most utilities and IPPs can sense pretty early on in just a couple of minutes of discussion whether they're speaking with someone who can sort of speak their language and really understands the complexities and nuances of these markets and tariff rate structures and um, details surrounding potential PPA transactions. They kind of quickly know who knows what they're talking about and who kind of has experience in those areas and who doesn't. And like I said, it's until recently there weren't a lot of people in the industry who could really speak from experience and speak knowledgeably about those sorts of topics. So I think that's been um, great for us when I was at both Compute North and now at Outlaw Mining to sort of leverage that experience and sort of just provide some instant credibility with the counterparties we're speaking with, and they can kind of tell pretty early on that this is a group that knows what they're talking about, and they don't necessarily have to spend hours or days or weeks on end educating them about how these processes work and why everybody who approaches them can't just step in and structure a $20 a megawatt hour power offtake agreement. It's
Right.
not quite as simple
Yeah.
as that. So um, that's been good. We've gotten a lot of good feedback from groups. Um, just expressing their, I guess, gratitude or encouragement in working with a group that has that kind of experience. So that's certainly been helpful for us.
I can tell you firsthand that these groups and companies certainly have a good sniff test kind of right out of the gate when they talk to you. Just a little bit about myself. I went from maxing out a 400 amp panel in my house to, hey, let's look at some of the smaller. There's a municipal company here in Minnesota, and then there's a group, a power generator that operates in the Dakotas and Minnesota, and they both were very gracious with their time and helping me understand, because I don't have your background, and so for me it was like, and I was upfront with them and told them that there's going to be a lot of coaching involved in this, but hey, we'll get something done if you guys will stick it out with me. And they were gracious with their time, but yeah, they can definitely tell right away that, okay, we're going to have to do a lot of educating, and there's maybe some lopsidedness to the understanding of how this will all work.
Yep.
So you brought up Outlaw Mining again, and so I'd love for you to go into who is Outlaw Mining and what do you guys do with your customers?
Yeah, sure. We are largely what I would describe as an early stage site developer. So, um, we typically get things started from a regulatory and permitting and legal perspective, in that, everything starts by sourcing access to cheap power supply. As you know, that's a critical component in any successful mining operation. So, pinpointing access to cheap power supply, whether that's in an existing, deregulated retail choice market like ERCOT, or, certain states within PJM or MISO, or accessing, an existing tariff rate on a regulated utility, or it could be, seeking one-off, either partial requirements or full requirements behind the meter type offtake structures with a specific generator. But whatever that combination is, it starts by sourcing the power supply structure, kicking off all of the regulatory and permitting steps in order to get that in place, which typically requires load studies and interconnection requests, and then working with whoever that seller is in structuring the terms around that power supply transaction, getting all that in place. We would also, in parallel to that, typically look to go out and acquire, or at least at a minimum lease, land within an area where we know we can have access to power supply from a physical perspective, where there's likely excess deliverability capabilities, whether it's certain substations or transmission lines, or directly with a generator where we know they've got infrastructure in place, and we wouldn't necessarily have to spend millions and millions of dollars in system upgrades in order to help facilitate serving a new load at that location. So pinpointing those locations that start with sourcing power, scalable power at a price that works. Once all that's in place, we get everything executed from an agreement perspective, and then we invest capital into physically bringing power to the site. So funding those system upgrades, building out new circuit to physically bring power to our land parcel that we've acquired, and then at that point we've essentially got a turnkey kind of shovel ready site development package that we can take to the market and look to sell that to other hosting companies or mining companies, so that they can bypass all the steps that we just went through. They don't have to worry about sourcing the power supply deals and getting through all of the regulatory and permitting steps. That's all already in place. All they really have to do at that point is acquire our site package and then just bring in their equipment to plug and play. So that's been our model to date. We continue to implement that strategy, across a number of sites that we have in our development pipeline. We're also, getting to a point where we would like to get a little more vertically integrated here at some point in the near future. So we are looking at potentially considering funding and owning some additional infrastructure on these sites, in a more vertically integrated fashion to where we could be doing potentially some hosting and or self-mining or some combination of that ourselves.
Oh, okay. What a fascinating business model, because again, I'm just thinking back to like when I maxed out a panel in my house to thinking I could do 1 to 5 megawatts myself. It was comical. Um, so it's, having a service like this is really, really cool. One thing that comes to mind that I'd love for you to touch on: where are you seeing the majority of your sites? Like, is there like a gravitational pull towards the ERCOT grid, or are you seeing, maybe it's ERCOT and MISO? Like, where do you see most of these opportunities pop up? And those are wildly different grid systems with wildly different types of ways to incentivize a large load customer. So I'd love for you to maybe go into like, where are you seeing most of this opportunity?
Yeah, sure. And those are different markets, but in many ways still operate much the same, with a few different nuances. But I think the short answer to that question is it really varies. There's not one specific region that I would say is necessarily better than others. We see opportunities all across North America. There's certainly markets that are really difficult to justify building projects and developing projects. Mainly it all boils down to cost, but also
Sure.
from a regulatory perspective. I mean, I personally don't know of any groups who have developed projects in California because the structure of their wholesale power market is just not all that favorable for mining operations. And from a regulatory perspective, there's just a lot more hurdles and hoops that you have to jump over and jump through in order to facilitate development of a new project. So there are a few markets that are difficult to justify developing projects in, but outside of that, it's pretty fair game. I mean, I think the large, I shouldn't say large majority, but a good chunk of commercial scale Bitcoin miners are in ERCOT and focusing specifically in that Texas ERCOT market, um, for a variety of reasons. I mean, perspective, offers very competitive rates. It's a deregulated retail choice market, so you don't have to deal with a regulated utility that has a monopoly on a certain territory. It's more competitive. That certainly offers some advantages, but also some potential disadvantages. But like I said, a lot of it boils down to price. And
Yeah.
the regulatory environment in Texas is a little easier to navigate. There's not nearly as much red tape and regulatory hurdles to clear to develop projects there. So I think the combination of competitive power prices and retail choice markets and fewer regulatory hurdles to clear has resulted in a lot of miners focusing their efforts in ERCOT and in Texas. But even outside of that, I mean, we have a number of projects in Southwest Power Pool, which is mostly, if not exclusively, all comprised of regulated, um, utilities, where there is no retail choice options. But
Oh,
we've seen a lot of miners focusing efforts in MISO and PJM, um, anything from munis and co-ops to investor-owned regulated utilities to retail choice states like Ohio and Pennsylvania and others. So it really varies. Um, like I said, it oftentimes boils down to two things, and that's cost of power and navigating the regulatory environment. So if you can find areas
sure.
where you've got competitive cost of power and you feel like you can navigate those regulatory challenges, then you've likely got a good site opportunity on your hands.
Okay. And I think it might be a little bit, again, just the lack of my understanding of it all. And maybe we'll get into it a little bit later on in the conversation, where what I'd be curious to know is, so you look at MISO, I live in Minnesota, so I'm very used to, you know, very cookie cutter rate structures. And I think again, I'm not super well versed in all of it, but I think that's because of the regulatory environment around how the power companies operate up here. And so I'd be curious if it's just being able to talk to these power companies in the right way to understand what those different rate structures are, where you can then find that advantageous power rate versus, ERCOT, where it's deregulated, and there are some different derivatives and hedging products that you can implement to help, maybe smooth out the power costs. So again, maybe we can get into
Mhm.
that later in the conversation. What I'd like to ask you is, when you're looking at these opportunities, are there particular types of power generators that you guys are zeroing in on? Is it, maybe overbuilt renewables that are sitting on a congested transmission, or is it, nuclear? Can you maybe touch on, is there a particular type of generator you guys zero in on?
Yeah, I mean, frankly, the reality is for a number of reasons, Bitcoin mining operations, because of their high density, high load factor characteristics with the flexibility in curtailment, really offer an array of benefits to any generator. So, whether it's a baseload resource like coal or nuclear, or, something in the intermediate range like a natural gas fired, whether it's combined cycle or even simple cycle type resource, um, or renewable generator, renewable projects. I mean, there's these facilities really provide a wide array of benefits to all of the above. But I would say, generally speaking, you're going to get the biggest win-win with renewables, typically because of where they're located. And as you touched on, largely as a result of the congestion and just, specific nodal pricing that they um, that they face relative to like heavier load zone regions. I mean, typically you're going to see base load resources and even intermediate combined cycle natural gas resources located in a little bit closer proximity to some of your heavier population load zones. Whereas, like with wind and solar, for example, that's not necessarily the case. They're usually in very rural locations, where, there's, as a result, a surplus in supply and not a lot of demand in those specific regions. And, somewhat, in most cases, limited transmission capacity, that can restrict their ability to move power from those areas into the heavier load zone population centers. So, as such, you can typically achieve a discounted power rate by locating, if you're looking at co-locating and physically putting a project behind the meter at a generator, you're typically going to achieve a little bit cheaper power rate via the PPA structure with a renewable generator. And then on the flip side of that, the renewable generator is likely going to see greater benefits to them, than, say, a coal or nuclear or combined cycle natural gas plant might see, because they don't have quite as much congestion or curtailment risk that a wind and solar facility might have.
Yeah, and I appreciate that. I am fascinated by just Bitcoin mining gets a lot of flack for its energy consumption. And so hearing, this explanation of, well, Bitcoin mining can really come in and be a huge benefit to these generators. I'm excited to go into that more. I have to ask before
Yeah.
we go there. I think of Iowa and West Texas when I think of like big wind farms and big solar fields, not close to a city. So there's not a lot of demand for that generation. What, just like from the very beginning, what is making someone build out those facilities? Like what drives someone to go build a bunch of wind turbines in Iowa where they know that there's probably not, even half the demand for what they're going to generate? Why are they doing that? Because they think 10 years in the future, 30 years in the future, there'll be that demand? Or are there other incentives driving the creation of these generation assets?
Yeah, it's in my opinion certainly the latter. I mean, it's really about building locations, building projects in locations where they can generate the highest volume of megawatt hours. So it's really pinpointing the areas where you've got the most abundant fuel source, aka the windiest regions, the sunniest regions,
Sure.
and really kind of saying, demand or load be damned. Like, I don't care necessarily that there's not demand in that specific area. I can build a project that's going to generate more megawatt hours per megawatt of project capacity. Then that's going to allow them to earn, more production tax credits, and ultimately the way these PPAs or virtual PPAs or even just merchant generators with hedges are structured, um, those are all going to be typically sold at a load zone point or a liquidly traded hub point. So, they might, I shouldn't say might, they would typically face some basis risk, but they would rather assume that basis risk in the project than to potentially build a project in a location where it's not as windy and they're not going to generate as many megawatt hours. So it really, in most cases, all boils down to just fuel supply potential. Where are the windiest locations? Where are the sunniest locations where I can ultimately generate more megawatt hours per megawatt of installed project capacity?
And demand be damned. Like they
Yep.
don't even really. Okay.
Yep. I mean, even
Huh.
if it's, oftentimes they're selling those offtake arrangements, via their PPA or virtual PPA, however they have that structured at a very far off distant location. I mean, they could be, in some remote West Texas location, but they're selling that at, West Hub, which might be physically, 300 miles from the site location. So yeah, demand isn't necessarily a key factor. Now, I think in a perfect world, every wind and solar developer would love to have both.
Yeah.
But that's, unfortunately just not necessarily the case.
Okay. You touched on risk a couple of times in there, Nathan. Can you maybe walk through what some of those risks are to one of these renewable generators and then how Bitcoin can come in and, is going to help alleviate some of that risk?
Yeah, sure. Um, I guess, and I'll speak generally, not necessarily pinpointing wind versus solar, one or the
Sure.
other, but
Yeah.
just
Yep.
generally either one typically face a few key risks, especially as a, well, it really doesn't matter whether they're a merchant generator or they've sold an offtake agreement via a PPA or VPPA or whatever. So first and foremost, you've got basis risk. So that just means, your remote location, let's just say for the sake of argument, in middle of nowhere, West Texas, you've got a nodal price point at your generator point in the market. And that price point is going to be different from a pricing perspective in most cases than like West Hub or West Load Zone, where an energy consumer would be purchasing their energy. So if I'm structuring a PPA contract with a renewable generator, I'm typically going to want that settled either at a hub where I can also have some ability to put some additional hedges in because, um, you know, that's where the liquid trades are occurring at those trading hub points or the load zone point where I'm actually buying my energy. I don't necessarily want to transact, 300 miles from where I'm purchasing my load and my energy from. I don't want to necessarily wear the basis risk as a load, so I'm going to put that on the generator. So
Okay.
when a wind or solar generator sells a PPA or even sells a hedge on a merchant facility, that's typically going to happen at a hub or a load zone point. And that pricing point can be very different from the price that they're actually receiving in the market at their generator location. So, you might go into a PPA transaction and assume that, I've sold this PPA at a trading hub, and I'm assuming I might have a $5 spread between that trading hub and my actual nodal point in the market. But if in reality that spread is $10, well, then I've effectively lost an extra $5 on my PPA transaction. And so basis risk is a big risk that most wind and solar farms face, and it's very difficult to hedge just because of the intermittency in output. There's
Sure.
just not a lot of great hedging products. In some markets, the hedging products are month-long flat blocks. So if you can imagine, if you're a wind farm and you want to put a 40 megawatt hedge in place for the month of March, that's 40 megawatts flat every single hour for the entire month of March. Well, the reality is, you look at the intermittency of wind output, and it's going to be constantly dancing above that or below that. And so
Yeah.
it's just a very ineffective hedging product for congestion. You have some markets that do offer some more granular options, but again, it's very difficult to predict, hour to hour what your output's going to be over a longer period of time. So those products are just, largely, in my opinion, ineffective for renewable generators. So when you look at the idea of like something like a Bitcoin mining facility developing their project and physically bringing their load to the generator, now you're settling at your generation point. So you've completely eliminated this basis risk of like the price difference between my generator nodal price point and the hub at which I'm settling that PPA transaction. Now I've effectively moved that hub to my generator point because that's where the load is, that's where the off taker is. So you've completely eliminated basis risk from the equation. And then you've got a couple of other issues that most wind and solar facilities face, primarily congestion and curtailment. So without a load there, a wind farm might be in an area where there's a dozen other wind farms, and like I said, somewhat restricted on transmission capacity to move that power out of that region to the
Yep.
heavier population centers. And during periods when there's relatively low demand in the market, maybe it's a 2 a.m. on a Sunday night in April when the temperature is 65 degrees and demand on the system is very low, yet you've got a lot of wind and a lot of wind generation. Well, that area might only have 1 gigawatt of total transmission, whereas the sum of all the available generation capacity at that point in time might be 2 gigawatts. So
Sure.
you know, ERCOT or whatever market that is going to have to restrict that production down to limit what they have available from a transmission capacity. So your 100 megawatt wind farm that might be capable of selling 100 megawatts for that given hour might be restricted to 50 or 10 or 0 via
Wow.
via economic curtailment. So the market could be sending them price signals, which in often cases, pushes prices into negative territory, where they're essentially just providing an economic disincentive for you to generate more energy, or they just physically curtail you down from a reliability grid perspective. But so you might have throughout the course of the year, you might have an extra 10% or 20% of energy that you had available to potentially sell and megawatt hours that you could have sold and collect, production tax credits, et cetera, for and PPA revenues that you weren't able to sell because of those constraints. And so again, when you look at physically bringing a load like a Bitcoin mining load to that facility and locating on site where it's behind the meter, well, now you don't really have a scenario where you're a net generator. If you're a 100 megawatt wind farm and I put a 100 megawatt Bitcoin mining load there, assuming my load is online, the generator is never going to actually look like a net generator to the market because my load is going to be consuming that all the time. So you've eliminated any potential curtailment risk there, and you're effectively able to sell every potential megawatt hour that the wind or solar farm can generate. So ultimately, it results in you selling more megawatt hours of energy because you're avoiding those curtailment risks or even congestion risk from a pricing standpoint. That's another benefit is, by physically bringing a load to that generator point. I mean, it just kind of boils down to simple supply and demand microeconomics. You're
Yeah.
increasing demand at that point without any change in supply. Well, that's going to
Yeah.
elevate the equilibrium price point. So the price that that generator would receive if they're on like an index PPA structure is going to be higher. And then,
Yeah.
sorry, real
Go
quick,
ahead. No, go
finally,
ahead.
you've got what I would refer to as volumetric or negative covariance risk, and this kind of pertains to hedges. If you're a wind farm or solar farm and you're a merchant facility and you've sold a hedge at a liquid hub trading point, um, there's this concept of basically a negative correlation with renewables oftentimes where the more fuel source and potential they have to generate energy, as that increases, it typically is the opposite in terms of correlation to demand and price on the system. So a lot of times, and it's more prevalent with wind than solar, but
Yeah.
you see the windiest hours tend to be hours where there's not as much demand on the system. And then vice versa, when you have hours where there's not much wind, typically those are really cold or really hot, high demand hours. And so you find yourself in this situation where if you've sold a hedge, maybe you're a 100 megawatt wind farm and your capacity factor is 40%, so you sell a 40 megawatt hedge to sort of fix revenues for your expected kind of average annual output. Well, that 40 megawatt hedge is going to settle independent of your operation. And so what that means is in any given hour, let's look at an hour where you're in one of those high demand and low output hours. Well, maybe your wind farm's only generating 5 megawatts of output, but you sold 40 on your forward future sale
Mm-hmm.
on your hedge. So because of that negative covariance risk, the price for that hour might be $1,000 a megawatt hour because there's insane demand on the system. Well, I sold 40 megawatts, and if I'm only generating 5, that means I'm only collecting 5 megawatts of revenue at my generator point. My 40 megawatts is going to settle independently. So if I sold that at, let's just say, $30 a megawatt hour, but the real-time market price is at 1,000, well, I'm losing $970 a megawatt
Oh.
hour on my hedge settlement. But I don't have 40 megawatts of revenue that I'm earning at my generator point at that nodal point to offset that. I've only got 5. So
And
that that
they're not paying in on that difference, are they? What you mean is they just missed out on revenue potential of $970.
no, what I'm saying is they are in essentially what I would describe as a naked short position where they've sold a futures contract with the assumption that they're going to physically have energy to offset that.
Ah,
But there's an imbalance there. There's a disconnect because
it's a huge, yeah. Yeah.
they sold 40 megawatts on their hedge, but they're only actually producing 5. So they've effectively got 35 megawatts that's just naked short exposure. And during Winter Storm Uri and ERCOT especially, that's where a lot of wind and solar farms who had sold forward hedges really got upside down it got ugly in a hurry when prices are at $9,000 a megawatt hour. So
Yeah.
there's that risk, which you can also eliminate by physically bringing a load like a Bitcoin mining load to your site, to your generator, and selling, what I would describe as an as generated PPA, which basically just says, look, I'm not going to promise you any volume within any specific hour. As long as I provide you a minimum number of megawatt hours throughout the course of the year, you're going to buy my megawatt hours. And I don't necessarily have to put any hedges or anything in place. Maybe I sold you a fixed price PPA, um, say $25 a megawatt hour. That just means every megawatt hour I generate, you're going to pay me $25 a megawatt hour for that. And so I don't have any additional hedges and potential, short exposure risk that you might typically have in the scenario where you don't have the Bitcoin mining load on site and you've got those hedges that are in, distant
That's way
locations.
better.
So,
It
yeah,
seems way better.
yep. So, I mean, you've really mitigated three huge risks that most every wind and solar farm would face. So, really every renewable developer should be begging for a Bitcoin miner to site a facility either behind the meter at their facility or at least close by, um, if nothing else, just
Wow.
to just to bring a high density load into that region, to help elevate the equilibrium price point, at their node.
Seems like a no-brainer. Absolutely.
Yep,
One thing that comes to mind when I'm thinking about that is Bitcoin mining loves to run 24 by 7,
yep,
365. And talking about that, intermittency, the sun goes down, the wind stops blowing. Are these Bitcoin mining facilities located at these renewable generators? Are they also plugged into a power source where they can run when the wind stops? That's
yeah,
probably a
absolutely.
dumb question, but I'm thinking about this like, boy, the Bitcoin miners must have like a 50% uptime if they're running, at this type of a generator.
Yeah, no, good question. That you're typically going to be interconnected at, if you're looking at a co-located behind the meter project with a renewable development, you're typically going to interconnect to the generator's project substation. So that
Okay,
gives you dual sources of power supply. You're going to be buying megawatt hours off the renewable generator whenever it's providing those, but you're going to get the balance of your demand from the grid.
got it. And then I would imagine that just blends out a power rate over the span of a year for one of these Bitcoin mining operators. Then, so that they're
Yep.
getting pretty advantageous power rates from the renewable generator, but then there are some times where they're pulling from the grid, and that just kind of smooths out to a blended rate. Okay.
Yep, exactly. And the other, there's an array of benefits provided to the generator that we just went over, but that's, and I mentioned earlier, it's truly a good win-win because the Bitcoin miner, you know, their alternative might be to just buy load zone pricing power, which is typically at a premium to these renewable generator nodal price points. So, maybe my alternative was to buy $45 energy at the load zone price, but because of basis and congestion and all that, I could buy that same megawatt hour from a wind or solar farm for $30. And so, maybe I structure my arrangement to sort of split the difference and just say, hey, your node has averaged $30, the load zone averages 45, there's a $15 spread there. What if I give you a $7 or $8 difference, and we structure a $37 PPA that gives the generator a $7 boost in revenues. So, their opportunity cost is a $7 per megawatt hour benefit. But for you, you're avoiding buying $45 energy from the load zone point, and instead
Yeah.
you're buying $37 energy from the wind farm. So,
Yeah.
um, it's a true win-win in nearly every scenario.
And I mean, it sounds so good for the generators, for the Bitcoin mining facilities. Like this sounds perfect. It seems like this perfect win-win. What I'd be curious to maybe jump into, what are some of the friction points here? What is some of the pushback, if any? Or is this like every wind generator is like, hey, drop a bunch of containers, let's go?
Yeah, I think we've seen the sentiment change a lot over the course of the past year or so, as a lot of renewable developers are now starting to realize all the benefits that they can achieve by, having someone like a Bitcoin miner be their power and energy off taker. So they're starting to seem more and more of them are starting to seem open to that idea. Um, but I think largely it all boils down to the credit profile. With any PPA transaction, the off taker is going to have to post collateral or provide, irrevocable letters of credit or some sort of credit facility that can support the transaction. And as we know, Bitcoin mining players in this space is still a relatively, nascent
Yeah.
technology for long enough to give these companies the sort of balance sheet and credit profile that their typical off-taker would be. I mean, if a wind or solar farm is looking to sell a PPA to a utility that's a $10 billion utility that's been around for 100 years, they've got a different credit profile than
Yeah.
XYZ
Yeah.
Bitcoin miner who's been in business for
2
18
years.
months. Yeah,
Yeah.
exactly. So
Yeah.
that's typically the biggest pushback is just credit profile, collateral, and credit requirements. Um, so sometimes Bitcoin miners have to get a little creative
Okay.
in putting like intermediaries in between the generator and the Bitcoin miner as like an intermediary sleeve off taker to provide the necessary collateral and credit requirements to help support the transaction. But outside of that, that's usually the only pushback is
Do you
just
think
credit
that
related.
sure, and I appreciate that. Do you think that that'll start to decrease as this industry has been around for longer? And I know you kind of touched on that, but in your opinion, do you think that these types of capital requirements, credit requirements, things like that are going to start to decrease? And I ask that because a lot of the conversations I've had, um, I had Bob Burnett with Barefoot Mining, who he and his group, they really target stranded, pockets of power and generation assets. And in our conversation, he highlighted that one of the points of friction for him is there are really large capital requirements up front, or they want to sign 2 years of power agreement, and just all sorts of things that are really big and extreme compared to basically any other customer that would go and take their power. Do you think
Yep.
that'll start to decrease?
um, this may not be the answer that most Bitcoin miners want to hear, but no, I don't see
Okay.
that decreasing. I mean, I think it kind of depends on the nature of your structure. I mean, we personally have experience with several utilities where you know they might require or it, the system in general might require $1 million worth of upgrades in order to facilitate serving this new load that we're looking at adding to their system. And I think a lot of utilities who are willing to front that cost, they, as a result, like they need a lot of additional collateral or credit to be posted to help justify them spending an extra $1 million on their system to serve your load. But in our case, we've oftentimes offered and have proceeded to fund those upgrades up front on our own.
Sure.
And in that case, most utilities or IPPs, whether they're renewable generators or whoever, are much more willing to say, okay, great, if you're willing to step in and pay $1 million worth of system upgrades and sort of own this exclusive rights to this power capacity as a result of you funding these upgrades, then absolutely we'll serve you. And they don't necessarily have a lot of additional collateral or credit requirements on top of that because you've sort of pre-funded all of those incremental cost requirements that they would face. Now, there is a little caveat if it's a utility in particular that has to go procure additional power capacity in order to serve your load, um, that might also be either an additional upfront cost or they would require some pretty stringent collateral requirements because oftentimes they're going to have to go spend a lot of money with an IPP or another utility, structure a bilateral offtake transaction to procure that extra capacity to help serve that incremental load. So it can vary a little
Okay.
bit, but no, I think the short answer is I don't really foresee these requirements going away or diminishing over time. Um, and that's often the case with any industry and
Sure.
business. I mean, if you're if you're a widget factory and you approach your utility and say, "Hey, I need 100 megawatts of load to help, me build widgets here," they don't know anything about the long-term sustainability of your business and whether they can justify, um, incurring additional cost in order to serve your new load. So
Yeah.
they're going to need some credit from you, or they're going to need you to fund some of those upgrades up front, or a combination of the two. So that's pretty common, and I don't really see that going away over time.
It's good perspective. So I appreciate that. And I think, maybe it's good perspective in general for Bitcoin miners. And I'm certainly not going to speak on behalf of the Bitcoin mining industry, but it it does feel like some people in the Bitcoin mining industry feel that they're getting picked on, when the reality of it is, like you just said, if it's like the fidget spinner. I don't know if you remember that silly little fidget spinner.
Yep.
Like if they wanted to spin up a plant and the utility company said, "Hey, it's been around for like 12 months, and you need us to upgrade immensely, we're going to have to either split that cost or that cost is on you." It's good to hear that happens outside of the Bitcoin mining industry.
Yep.
Um, I am curious, kind of it's not political, but another, another perspective from you, or your opinion on the renewable energy space is supposed to be, the direction that we're going as a nation, carbon free. We want all of our generation to come from renewables. Do you think that there a worry that there is so much incentive for Bitcoin mining that the people who want to build out a wind farm or a solar field, they're more incentivized to go either vertically integrate Bitcoin mining or just have a Bitcoin miner be the sole off taker? Is that a concern, or what do you think about that?
Yeah, I don't know that it's necessarily a concern. I think, um, like I said earlier, of all the different types of generator types, I think Bitcoin mining serves as an additional subsidy to help subsidize, either more profitable operations for existing projects, or subsidize development of new project development, um, specifically with renewables, mainly because of, like we talked about, their locations, in the more rural areas, to know that you could potentially have a high load factor, flexible off taker that could potentially be, your end use counterparty there. Um, that's going to provide additional incentive to develop new projects, or like I said, offer up, incremental benefits to existing, merchant generators who already have facilities online.
Okay. So it's another tool in the tool belt, you're saying, and it's not really something to be worried about that the world is going to be consumed by Bitcoin mining, or that Bitcoin mining rather is going to consume the world's electrical capacity.
Yeah, I don't foresee that happening
Okay.
at all. And, I think, obviously we're familiar of kind of how the Bitcoin mining network works with the halving cycles, and, how many self-correcting mechanisms are built into the Bitcoin network. Um, because of that, I don't see a scenario where we're ever going to get to a point where we have like 100 times the mining capacity that we have online right now, because every 4 years your revenue gets cut in half. I mean, what
Hmm.
what other business model have you seen where you say, hey, I want to start a business, but I know going in that my revenue is going to get cut in half every 4 years? That's a
Systematically, yeah.
systematically cut in half. That's a pretty daunting outlook, and because of that, I think there's just sort of an invisible cap on the amount of total, mining capacity and hash rate that will be dedicated to Bitcoin mining, because anything more than that, um, you're going to have layers of profitability amongst different miners. And, as hash rate climbs, or hash price dips, those miners on the fringes of profitability are going to get squeezed out, and hash rate's going to come offline, and thus load is going to come offline. So I don't really foresee a scenario where you know the rate of load growth is increasing, multiples and multiples beyond where it kind of is now, or at least will be over the course of the next few years. Certainly after we get through the next couple of halving cycles, I just don't see a scenario where we've added, 1,000 gigawatts of additional Bitcoin mining load. If that's the case, then we're all going to be fighting for, fractions of awards that are likely just difficult to justify investment in that capital infrastructure.
Couldn't agree with that statement more. I think that is a huge piece that's missing in the Bitcoin will consume the world's power narrative. Yeah, so I appreciate that a lot, and I think that's something that can't be overstated enough. So that's awesome.
Yeah,
I am curious, so understanding it's not going to consume the world, but it is a really, really good tool in the tool belt and a really good incentive structure for these guys. Are you starting to see more vertical integration? Are some of your customers, and maybe you can or can't talk about it, but are you seeing customers come to you and say, hey, we're going to go build out a new wind farm and we want to designate 50 megawatts to Bitcoin mining?
definitely. I think, 2 years ago, no IPP or utility would have ever considered that. But I think nowadays, the sentiment has shifted. I think a lot of these IPPs and generators, and it doesn't matter whether they're renewable or, you know, coal or nuclear or gas-fired generation or what have you. I think they're starting to realize the tremendous power that being vertically integrated and having a Bitcoin mining or just data center in general on site provides to them in terms of like giving them this sort of additional call option on an ancillary revenue stream. Being a truly vertically integrated hash or cache scenario. And if you own everything, if you own the fuel source and the generator, and you're interconnected to the grid, and I can sell power to the grid or off takers, or I can be mining Bitcoin because it's more profitable. I mean, you truly have these, effectively this switch that says, what's more profitable, mining Bitcoin or selling power to the grid. And I think there's a number of more forward-thinking IPPs who have really started to take a close look at this, and some of them have implemented now, some smaller, what I would describe as maybe more pilot project type size
Oh, wow.
projects. But I personally foresee the future as a scenario where it's largely the utilities and IPPs who are vertically integrated with their power sources who are the ones who are not only mining but the most profitable miners within the global mining marketplace. And frankly, same goes for the off-grid scenarios where you've got oil and gas producers who have got flare gas that they can monetize. Same scenario applies for them. It's like, okay, you're telling me I can access more oil in the ground because I don't have to worry about flare gas mitigation issues and getting air permits and things like that.
Yeah.
I can capture that. I can run that through a generator and power a Bitcoin mining operation and be this kind of fully vertically integrated oil and gas and Bitcoin mining uh, operation where I've essentially cut out the middleman of other developers and Bitcoin miners. I think ultimately they'll be the most successful and most profitable mining operations in the future moving forward.
Yeah. I I'm so excited to see, and I think it's going to be near term. I'd love your opinion on this. I think within the next 5 years, you're going to see more and more of it, and it's probably going to become more public. Also, you should probably copyright the phrase hash or cash. That's pretty slick. I like that. That's it'd be Pretty cool name for a pilot program at one of these utility companies. So
Yeah, I mean, it's funny.
yeah,
I remember, last year before, before we saw the big pullback in the price of Bitcoin. So this would have been, maybe January, February-ish 2022 as we were talking about pitching this idea to IPPs. You know, IPPs especially, they know PPAs and power offtake agreements and tolling agreements. I mean, that's their language. They understand that. So to go to them, and I think at that point in time, the break-even price of Bitcoin was about $200 a megawatt hour. So to potentially
jeez.
go to an IPP, I mean, if you were to approach, let's just say, a combined cycle natural gas plant and say, look, you can install some additional infrastructure here, and it's going to give you a call option on essentially a $200 per megawatt hour PPA. Would you be interested? Granted, the CapEx, it's not free to build out that infrastructure. It's not free to acquire ASIC machines, but to know I've essentially got this $200 a megawatt hour PPA that I'm monetizing whenever I want. And if the power market happens to jump to a price above that, and I can sell power into the market at $500 a megawatt hour, well, I'll do that. I'll flip the switch and sell it to the market. But this idea of like potentially quote unquote selling a $200 a megawatt hour PPA, any IPP would fall out of their chair if you would offer them that
Absolutely.
that type of a contract under a normal PPA negotiation circumstance. They'd be chomping at the bit to that. And I think, like I said, a lot of the more forward-thinking ones have started to, run the numbers and realize the potential there. So we've certainly seen some new developments in that realm.
I think a lot of it has to do with the language that was around the Bitcoin mining industry. Honestly, the way you're saying it right now, I think highlights that point where if you can put it into their language
Yes.
and tell them and put it on their desk as this is a $200 a megawatt hour PPA.
Yep.
Do you want it? I mean, yeah, they'll fall out of their chair, or they'll think you're bullshitting them because it's like, where are you finding that? So yeah, I'm so excited to see how the future kind of shakes out with all this. Um, so Nathan, as we kind of wrap up the show, I would love for you to touch on, for a power company or an operator of a renewable generation asset that might not be understanding this, what would you say to them? And I guess this is kind of the outlaw mining pitch, but what would you say to them to maybe have them reconsider a Bitcoin mining operation?
Yeah, I think I'd love to focus on the utility side of things since we kind of already touched on a lot of the benefits to renewable generators or generators in
Sure.
general, and eliminating basis risk, eliminating a lot of that negative covariance risk and volumetric price risk. But from a utilities perspective, this is something we haven't touched on and I think is really important. And I think when you start to have conversations with utilities, eventually the light bulb goes off with them and they realize what a tremendous benefit it is to have a Bitcoin mining facility site a system or a load on their system. And that is because of the high load factor that Bitcoin mining operations can operate at, coupled with their flexibility and curtailment capabilities. So, having a high load factor load on any utilities system in general is seen as a very good thing in the eyes of the utility. And load factor, for those who may not be aware, is simply the ratio of average load divided by peak load. So if you think of, if you've got a 10 megawatt Bitcoin mining facility, if your average load throughout the course of the year is 9.5 megawatts and your peak load is 10, well, you've got a 95% load factor. That means it's just very, very consistent throughout the course of any period of time. Well, residential loads are like 20, 30, 40%, and
Yeah.
even
Yeah.
a lot of commercial and industrial loads are 50, 60, maybe 70% at best. So when you start talking about 90+% load factors, that's really appealing for a utility, because ultimately what it boils down to is they're able to spread more megawatt hour energy sales across the same bucket of fixed costs, of capacity costs. So anytime you can help a utility elevate their system load factor, it just means more incremental energy sales per the same unit of fixed capacity costs. And one thing I touched on with a group we were talking with a month or so ago is really for a Bitcoin miner. So two things. You can think of a Bitcoin miner, if you think of their peak load as coincident to the utility system peak, and if the Bitcoin miner has signed up to participate in a curtailment program where they say, look, anytime your load is as a system is in the top 2 or 3% of your peak demand hours, you can just tell us and we'll come offline. So what that means is, as a Bitcoin mining, their coincident peak load, coincident to the utility's overall system peak, is zero, because they've said, hey, I'll come offline when you're at your peak system conditions. I'll come offline.
Yeah.
So the denominator in that equation is effectively zero. So I've got a high load factor load, but really my peak load coincident to the utility's overall system peak is zero. So I've effectively got an infinite load factor. And that's just really, really powerful, because if you look at most utilities' load duration curves, which is like the percentage of time throughout the year that they're at certain load points, you see that most utilize 25% roughly of their capacity less than 5% of the time. Meaning, if the utility has a 1,000 megawatt peak, so they've got 1,000 megawatts of capacity
Yep.
plus capacity margin reserves, but let's forget about that.
Yeah.
But
Yep.
roughly 250 megawatts of that top portion of 25% of their capacity is only used 5% of the time. So if you're a Bitcoin mining load and you say, hey, let me size my facility inside of that 25%. So in this case, 250 megawatts. You say, hey, I'll put a 250 megawatt load on your system, and I promise to curtail and be offline during the top 5% of your load hours. Well, what that does is it allows the utility to drastically increase their overall system load factor, because your load factor is so high, but they don't have to go procure a single incremental megawatt of generation capacity to serve your load. You're just making more efficient use of the existing capacity that they have. So again, that's just really powerful for a utility to know that they've now got a shit ton more megawatt
Yeah.
hours to spread across the same fixed capacity cost. So just a lot of benefits to the utility that I think a lot of utilities may not think about when you approach them about wanting to build a site on their system. Their immediate reaction is, oh man, I'm going to have to go procure another 100 megawatts of capacity to serve your load. And you say, not necessarily. If I agree to a curtailment program, then we can fit this new load within your existing capacity stack, and you won't have to change a thing. And all we're ultimately going to do is boost your system load factor. It's going to be good for everybody. I don't know that they're necessarily going to go lower rates as a result of you siting on their system, but they're ultimately going to have a more efficient operation via a higher load factor.
That is such an incredible point. And Nathan, I feel like we could do a whole nother podcast episode on just the actual like utility and that portion of this alone. Yeah, it's such a cool thing to keep in mind and so eloquently said, because I know some of these power companies are not thinking of that aspect of it. So that's really incredible. Nathan, I'd love to end with giving you a chance to let our listeners or give our listeners a way to get in touch with you. Maybe how do they find Outlaw Mining, get in touch with you or your sales team? Maybe just kind of wrap up with that.
Yeah, sure. You can find us at outlawmining.com. easiest way to get in touch is drop us a note through our contact form on the website. If you'd like to reach out to me individually, please feel free to do so. You can email me at nathan@outlawmining.com, and love to hear from you. We've got a variety of site developments in our pipeline, ranging from anywhere from small 5 to 10 megawatt sites to 50 megawatts. Sometimes we've got a variety of sites, anywhere between 100 and 300 megawatt sites available, from a variety of different generator types and market locations. So, got an array of options to suit your needs if you are in the market for power capacity to help support your mining operation.
Great. Nathan, really appreciated the conversation today. This was mind blowing for me and really exciting to go through all of that. I think the listeners will be able to take away a lot of good nuggets of information for what the benefits are for a Bitcoin mining load on their grid or at their renewable generator. Um, really appreciate the time. Thank you.
Yeah, likewise. Thanks for having me.
All righty. You take care.
All right.